All right, boys. What are you looking at today? I heard Marcin bought a new name. I don't know if he's going to talk about it today because I don't think he's done that much work on it. But he liked it enough to take a starter position. I'm sure
I
there's. Go for it.
I liked it enough to take a starter position. It's a company called Paysign. PAYS is the ticker, and it's like a specialty finance. It's a fintech company that specializes in two niches in the healthcare system. Um, they run the payment processing system for plasma and blood donation centers.
Huh.
And that's actually a growth business because they need plasma to do these IV and subcutaneous drug delivery systems. And I own that subcutaneous pump company, Koru Medical.
Yep.
So that's a mid to high single digit revenue growth opportunity on a long term basis. But more importantly, they run, and this business has been really growing for them. They run these programs for the large drug companies to gain access to drugs for low and moderate income demographics. And they have programs at 6 of the top 10 companies for individual drugs, and they don't have the GLP-1s yet. And if they get them, that'll become a huge deal for this company. So watch out if they get, Ozempic and Manjaro, because there's obviously a lot of obesity in that cohort. So it's just a matter of figuring out how to service them. And they use the discounts from the drug companies, and I think they use government programs as well, like Medicare and Medicaid, to help subsidize, so people can afford things that they couldn't just 100% out of pocket. So that would be a big boom for the company's business if it happens. It would ramp up the growth rate. The companies will have doubled sales next year in 3 years if they hit this year and next year. So they were 30 million in sales 6 years ago. This year they guided to 120 million. So they've increased their revenue 4 times.
Organically, or did they buy something?
Organically in 6 years. So it's a high growth company. It's a niche. I don't know the TAM is big, how big it is, but it's about 3 times sales, and they're nicely profitable now. So they make actually very good profit margins. So it's a company that it's cleared, it's very cash flow positive, and they have a small. They say they have a 600 million to 800 million TAM for drugs, and for managing the blood collection and plasma collection centers, another $500 million. So they're only $100 million company and $1 billion TAM total, I would think. So they could still double or triple the business and still have runway after that. It's not.
Hey, Robert, what numbers do you have? Because I'm staring at earnings per share of 24 cents this year, 31 next, and a PE of 44, which sounds very un-Robert. You have a different number than that?
No, but I paid $5. So it's a $5 stock, PAYS.
Okay.
So as you see, I don't know what the PE might be trailing, but look at the stock. If I'm in at 5 and they're making 30 cents, what's 5 divided by 0.3?
So what was the catalyst there that kind of got everybody paying attention to this all of a sudden?
So they had a buddy of mine has. Now, first of all, let me sort of go back. A buddy of mine had been pitching me last year after it had corrected from 8 down to 6, and I watched it go down to 3 to 4. And they had okay numbers, but not great numbers in the last 2 prior to this most recent one. And when they had a big beat and raise in the quarter and raised their outlook from like 20% growth to 30% growth for the year. and 30% growth is very, very strong. So if they make 30 cents, 20p is 6. So it's 20p now. So
Yep.
could it go to 8, 9, and I'm in at 5?